Hey, welcome back everybody to another market day. I am your designated Inquirer. My name is Axel and it is 9/16/2020. Now, on the Nasdaq today, we basically saw a deteriorating environment where we did at one point. Today was a very weird day because we had the Fed basically speak and as was mentioned on CNBC, within basically 45 minutes, we saw basically the high of the day, almost near highs of the day. We went to near highs, and then we went and we saw the low of the day. That's all within basically the Fed releasing their report slash future operational moves for the next 3 years, and them taking questions from the financial press. One of the questions that I can save that actually for another video, so we'll do that. All right, now let's see. This is basically where he started speaking and when they released information. We basically saw a spike, we saw a dip. From here, we basically saw this is basically a point of resistance, which it basically kissed off of. If we go over to the 2 hour here, we can see where that resistance comes from, which is way back over here. Wait, no, that one's right here. That one comes from over here. So this was a previous resistance. It went above it. It used it as a support. That was pretty good tell. And over here, it's basically acting as something that it crashed through. Basically, it started approaching, acted as a support, crashed through it, came up, crashed through it again, and over here it started using it as almost a point of resistance. Okay, this is where a lot of action, where a lot of turning around basically happened. Dropped down, came up. Because now it's muddled, it can go through it but then decide to turn around. So there's a level of which this area now becomes an area of resistance, and it dropped back down. We went back up more recently here. We did make a lower low. We went back up. Tomorrow, we don't know. We may get basically another attempt to break this level right here at basically 10,935. So pretty close to 11,000. And yeah, psychological level 11,000. If we do break past it, we probably are more than likely going to be seeing a shot at the lows. If we do end up closing above it, which it has been the case, we may see a jump to the upside. But if we do end up closing below that within a 2 hour time frame, then we may see continuation and a break of this low once more and a further run down. What level can we hit? Well, that all depends because there's quite a few levels along the way. So that is the Nasdaq. If we go ahead and we take a look at the VIX real quick, interesting thing about the VIX is that we did see a little bit of a spike today. We saw a little bit of a spike today at the end of the day. We're starting to see movements to the upside. Okay, just getting a little antsy. This seems to be a good level of support, basically 25 flat. And if we do make a run at 35 again, whether or not we stay at 35 and or we blast through it will remain to be seen. And if we do, well, maybe we hit 45, maybe we hit 47, and basically sky's the limit. Considering where we are, that we are now basically in negative momentum, this volatility can extend possibly higher. Bonds are decidedly cheaper now than they were, I think, back here. Yeah, I mean, there was a lot of stimulus happening here too. So if we do visit those levels again, it would be really, really interesting. But in any case, yeah, that is the VIX. Let's go ahead and take a look at the 20-year bond real fast to see what happened today. This was a very weird caveat that happened today. When the Fed speaks, it more than likely affects bonds. In this case, it affected bonds, and people basically sold on the news. When they sold the bond, this ETF right here is a kind of a representation of the value of the bonds. So when they drop, it means that people were selling bonds and that the yield was going up. When they go ahead and they buy bonds and this goes up, yield is moving down. So what we do have here is basically people selling bonds into the news of what the Fed did. Now, what was kind of interesting about it was that when we move to the 5-minute here, we do see a fair amount of volatility, which is not usually the case. Generally, volatility is pretty tight. Even though we may have large moves, volatility within a single candle is not necessarily very high. We had been basically going very quiet, and the moves were very almost predictable. What we had here was an increasing amount of volatility in the movement of the bond. What we do have here, though, is a few movements basically to the upside, and here we do have a movement to the downside in terms of momentum on the 2-hour. So we may see an opening lower or not, because according to Mr. Steven Van Meter, we have crossed basically a level where generally there are buyers of bonds and where we could see higher levels from here, considering that the Fed is maintaining their position to maintain quantitative easing for the next 3 years. Anyway, I will talk more about that in a later video. So till then, feel free to stick around and watch the video on Bitcoin and the Fed, or else I bid thee adieu. Have a nice day, stay safe, stay healthy. Until next time, take care. Bye.